See, well, like you'll know that as soon as we start going back up, we're gonna hit that resistance level right here of 254 because this was previous support, but that now becomes resistance. Okay, always remember, anytime you break through, if you go past a support, that now becomes resistance. People are stopping you from getting it back up. It's the same thing if you break resistance. As soon as you break resistance, it becomes support. So right now, this is a huge pullback we had. Okay, so we know this is going to come right back up. So we order two call options on here. On the monitor, we have two call options. I had to reset this a bit because the video ended, so. All right, just give it a couple of seconds. We're currently right now halted, but soon to be we're going to be heading up higher in a second. But those two call options that I bought, you can see one has a higher delta, one has a lower delta. We're both in a high IV environment, okay? And you can see which one makes more money in a few. So you see right now I'm losing more money because I have a higher delta because I got in at a bad time, but timing it because I market ordered it into their mid range. But you'll start to see as soon as we go up, this call option is going to make a hell of a lot more. Well, this $60 call will make a hell of a lot more money than that $800 call that has a low delta. Okay, there's a way for me to actually I can add delta right here, so you can see delta. There you go. Add that as a criteria for folks to see exactly what I'm talking about. Let me move that up. Okay. Boom. So you can see I have a delta right. This is my delta column right here. So you can see this has a higher delta, has 84 delta. So for every dollar it goes up, I make 84 bucks. For this 800 call, I'm only making 10 bucks right now for every time it goes up. So, but remember, the higher we go up, the more this delta changes also. And this is a March 19th option, so the gammas are high too. So if we go back to that option chain on the calls I have, this 60 call most likely has a gamma of, let's take a look. Okay, this has no gamma because we're in the money. But if we go to that 800 call, it should have a high gamma. Oh, it's not showing the gamma values on here. But usually when it's 9 days to expiration, the gammas are extremely high. Just ignore that the gamma is saying 0 because the gammas are really high towards expiration. This is just a simulator. But we're going to go back to the chart. We're going to skip 15 minutes because this is taking a minute. Boom. All right. So we got our bounce here. Okay. So those call options, we go to them. I'll let this pre-buffer. Also, I did bought a call option, okay? I didn't buy a stock this time. We bought stock the last time we made 18 grand. I'm now doing it with a call option, so my option viewers can see also what's going on and how to get by with options. But we're doing this as a day trade. You do not want to hold a call or put option when implied volatility has skyrocketed like this. If you're in a day trade or a lottery ticket, you made your money. Now, hey, you made money on the delta. You made money on the implied volatility jumping up because we are in a trade that's only going to last, 9 days. This is March 19th, and you can see here, you see in this parentheses here, it's 9 days. See, days until last trading day. You don't want to be in this trades for long. These are lottery tickets. These are the ones everybody loves but needs to be out quickly and rolling to the next contracts. So I don't know why this is taking. It's probably it just keeps getting halted. Okay, now we're moving. Because I fast forwarded 15 minutes, but it's just halts after halts after halts after halts. Let's just fast forward and get to the point. All right, so we broke that. You can see, remember what I said? That every time it drops tremendously, you're going to have a mean reversion where it pulls back. See how it mean reverted on the RSI? It'll pull back to mid-level. So it's going to, it's going to pull back here to the mid-level here. Okay? And it actually broke that resistance level again here. And now it's retesting it. Right here, as a call option buyer, I don't know where this trade's going to go, whether it's going to go higher or not. Okay? But it's a lottery ticket. We don't know if this is going to come back lower and you're going to lose money. So all I know is, hey, I need to take some money on this ticket. But before I do that, I'm going to look at how much I made so far. I made $3,000 on that 60 call. You see that? Because my delta is now almost close to 100. And my 800 call, I only made $700. So $3,000 compared to 600. That's why at the monies are better than out of the monies, because low deltas, you don't make that much. I'm going to take profit on both of these. I don't want to stay in this trade. So I'm going to create a closing order right here. I'm going to sell this, make a couple of dollars, because this is a lottery ticket. Confirm, sell, get rid of that one. And what else I'm going to do? What else is left? Okay, I got to wait for that to exit. I'm going to get out of this 800 call too. Take some profit immediately. I'm not going to stay in this trade because I already made some quick money. That's what I was here for. It was for a quick trade. So I'm going to create a closing order. Sell 100 GME. The order's coming up. Confirm. Out. That's it. I took my profit. I made my money. Go here. So I made $23,000. Now I could do what you call rolling. I could roll to another contract that's even more safer. So I made $23,000 today. Well, from the $18,000 I made from the stock trade. I've also made $3,000 from that dip buy, okay, with the call option, and I made $700, okay. Now, obviously, the size of my stocks was a lot bigger than my call option. I only bought a couple call options, and I almost made $5,000. But altogether today, I made $23,000. So I could go ahead and use about, let's just say, $4,000 in dry powder, and go back to the option chain here. Instead of picking a 9-day, I could go straight here and roll the contract. Roll the contract I just made in profit. I made $4,000. I can go here and pick a more safer option that's 37 days now and look for something that's worth $4,000. Okay. See here. It would be here, a way out of the money. I'd go for this one. How much is this going to cost? $4,700. So I mean 47, which is $4,000. See right here, $4,700. Okay. I buy that one. Yes, the delta's small, but I put myself in a more longer-term contract. I could have done that, but let me get rid of it because we don't want to be sitting on that trade, because I don't like anything under 90 days at all. I do not like it. So I'm going to get rid of that 800 call. Just create a closing order for that. I'll take a little $25 scratch, sell that, close that trade out. All right, we're out of that. All right, so that was just for example I wanted to show you. So let's go back to the chart. Look at that. Look at that. All right. That was a nice candle right here. That last 5-minute candle. We went and broke all the way back up. That was a huge dip and rip. All right. Let's fast forward. Let's go back. Let's go forward in time now. All right. Keep going. Keep going. I took profits because I know there's always going to be a bounce back. But after that bounce that happens, we don't know if it's going to go higher or not. That's why it's smart to take some profits away off the table on the way up as a day trader. As a day trader. If you're a swing trader, you're just looking at this. You're just looking at it. And, if you have a long-term call option that you bought way back in February, this is not going to affect you. You need to be looking at larger time frames, which would be the daily chart. Okay? You should be looking at this chart, not the other chart. If you're looking at the daily chart, if you have a big position, it's hitting these levels, and now it's creating resistance right here, that's how you make your decisions right now. Okay, it made a lower high. So if it made a lower high on the daily, I may want to get on my long-term positions also. That's when you make the decision. You're doing it on bigger time frames. If you saw that and this happened here, I would have been out of my big position. But, and that's for a swing trade. I would have been out and try to rebuy the dip on the bottom. Or I would have diamond handed because I knew the situation with GameStop and AMC. There might be synthetic shares out there that for GameStop and AMC, and it's being heavily shorted, and you're diamond handing it. But in the meantime, you know that's what you're judging it on your long terms. But if you're day trading options, you need to be quick. You need to be fast. Okay? If we go back to that, the option chain, look at the thetas. This is $131 a day. Here, $131 a day, $133 a day, $135 a day. And that's 37 days away. Let's go to 2 days left. Let's look at the theta on the out of the monies. Ridiculous. Oh man, that's a mess. Especially look at the money. $500 a day you're getting in time decay. Do you want to lose $500 a day? No way. Oh, hell no. Okay? And I'll be going over that options in an option video, which would be part 4. And I'm going to go way in depth into options in my option videos. But this is more along some dip buyings with stocks. I just wanted to use the same scenario, but with options, so us option folks get a brief understanding of what's going on here. So, going back, look at that. So you take profits on that. All right? It's horrible, horrible, horrible. Let's see how the day ended. Let's go 1600 is 4 o'clock, so that'd be the end of the day. So let's just go straight to the last 8 minutes of the day. Fast forward. Okay, we held our ground here. I'm going to go to the last minute of trading day, which is the most volatile. Is the last minutes. You see how implied volatility was high, then it started hanging there, hanging at this level. It's starting to drop. You're starting to see a drop here. You don't want that. That's an IV crush. You don't want IV crushes. It's with your options. You don't want that. And as a dip buyer with just regular stocks, you're looking at this, and you're day trading. You probably want to get out because you don't know how it's going to end tomorrow. You'll take most of that profit off the table because that's a quick gain. For you to go from 184 to, you did buying it there while it was red, from 184 to 272, that's a good profit. Mind you, when we dipped down here and we held here, you should have been looking at the level 2 right here, making sure there was a wall of buyers. But it's kind of hard because crazy dips like this, they're 100, 200, there's always halts. So it's really hard for you to see the level 1 and level 2 and what's going on. There's a lot of institutions and cheaters that get in there and they get it before you do, and then it heads back up. So I know this part of this portion of the videos were very, very long, but I wanted to give you just the day trader's mentality and scenario of how every single day intraday, how people are thinking, because every single detail leads up to a much larger picture. Okay, every battle every day leads to something that's major. Okay, so we have our down days, we have our up days, but you're seeing how the action is playing out. Yeah, some days are boring as hell and there's consolidation and there's nothing. But remember, consolidation is your friend, especially on the longer term. Because if you look at the longer term, remember what I said about trapping a bunch of short sellers and buyers? When they're trapped within this range of consolidation for a long period of time, you have an explosive movement to the upside, but on a bigger time scale. Okay, you have more short sellers trapped in here, and you have more long buyers trapped in here. Okay, and they're still stuck in there. Eventually, one's going to lose. As soon as it breaks, they start covering, and there's a huge amount because you can see the volume here, 71 million on that day. A huge amount of short sellers start covering, and you head higher, 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 and it tests a new support, a new resistance level here. See what I'm saying? So I'm going to go with the psychology of trading these levels, and I'm also going to go about minor support levels later on today, tomorrow, or within the week. I just wanted to get this video out onto my YouTube channel that I'm about to create. And thank you very much, and I hope you learned something. Thank you.